Big news out of Washington. The U.S. Senate has unanimously passed the No Tax on Tips Act, marking a rare moment of bipartisan unity. This legislation could have a massive financial impact on millions of Americans, especially those working in tip-based industries like restaurants, hospitality, and personal services. According to a recent Pew Research study, about 43% of Americans have worked in a job where they received tips. That's a significant portion of the workforce, and this new legislation could mean serious tax savings for them. Let's break down what this bill is, what it means, and what's coming next. What is the No Tax on Tips Act? The bill, which was passed in a surprise move, originated from a campaign promise made by President Donald Trump. Here's what it includes. Tax exemption on reported tips up to $25,000 per year. Applies to cash, debit, and credit card tips, all considered cash equivalent transactions by the IRS. Applies only to workers who earn $160,000 or less per year in 2025, indexed to inflation. To qualify, the tips must be reported to the employer for withholding purposes. So if you're a tipped worker reporting your income, you could soon be keeping thousands of dollars more per year. What happens next? While the Senate passed the bill, it still has to go through two more steps. The House of Representatives needs to approve it. It then goes to President Trump for his signature. Many expect the House to pass it as well, but nothing is guaranteed. Lawmakers may try to attach unrelated amendments or provisions which could slow the process down. If the bill makes it through the House without delay, it could be signed into law fairly quickly. However, it's just as likely that it becomes part of a broader legislative package, what some are calling the Big Beautiful Bill, which could take longer to negotiate. When will it take effect? That's still unclear. If passed as a standalone bill, implementation could happen relatively soon. But if it gets tied into a larger package of tax reforms, we might not see it finalized until closer to July 4th. A date lawmakers are informally targeting for broader legislation. What's the cost? The estimated cost of the No Tax on Tips Act is $110 billion over 10 years, or about $11 billion annually. Supporters argue this is a small price for the government to pay in order to provide direct financial relief to millions of hard-working Americans. What else is on the table? In addition to this act, several other proposals are being discussed in Congress, including no tax on overtime pay, enhanced child tax credit of up to $2,500 per child, increased standard deduction for seniors. These could potentially be bundled together into one larger bill, which may complicate or delay final approval. Still, the bipartisan support for the No Tax on Tips Act gives hope that more meaningful tax reforms could be on the way. Final thoughts. The unanimous Senate vote is a rare and powerful sign that both Republicans and Democrats are willing to work together on common-sense policies that benefit everyday Americans. If passed by the House, the No Tax on Tips Act could be life-changing for millions of workers. As we approach Memorial Day and head into June, expect the pace in Washington to pick up, especially with the 4th of July deadline looming. I'll be keeping a close eye on every development and will bring you updates as soon as they happen. If you found this breakdown helpful, be sure to like, follow, or subscribe for more updates. Thanks for reading, and I'll see you next time.